Thanks for your company. My name's Jessica Amir for the Finance News Network. And with me today from ALE Property Group is CEO and Managing Director Andrew Wilkinson. Andrew, thank you so much for coming in.
I'm pleased to be back.
So for those who are unfamiliar, you're Australia's largest owner of freehold pubs here in Australia. You're also a real estate investment trust technically. So just give us an introduction.
ALE was first listed back in 2003, nearly 16 years ago. We own 86 pub properties all around Australia, mostly on the eastern seaboard of Australia, Sydney, Melbourne, Brisbane. All of the properties are leased to ALH. ALH is the largest pub operator in Australia. They're 75% owned by Woolworths, 25% by the Bruce Matheson Group. They turn over around $4.5 billion a year and a profit before rent of more than $800 million. So a very credible organisation in its own right. In terms of the properties we own, where will I start? Over in Perth, the Sail and Anchor in Fremantle. In Melbourne, the Young Jackson, right opposite Flinders Street Station. In Sydney, the Crow's Nest Hotel, and up in Brisbane, the Breakfast Creek Hotel. So a well-established and very credible property portfolio.
And earlier you touched on profit. You've also just handed down your numbers for the full financial year. So all in entirety, can you give us a snapshot and some of the highlights?
A distributable profit of $28 million, in line with expectations. The distribution was up 0.5%, 81% tax deferred. The value of the properties up around 2% to over $1.1 billion, and our gearing at an all-time low of 41.5%. The total return from for our equity investors since 2003 to 30 June this year was around 20%. And that's outperformed not just the property index or the REIT index, but also the All Ordinaries index.
And what drove the results? And congratulations as well.
The result was driven by an increase in the rent on around half the portfolio. That flowed through to the valuations, and the value is very focused on the fact that the pub property market continues to be very strong, and we grow closer to the 2028 open reviews.
And you're in the midst of a pub portfolio review, looking at your rents as well. Just tell us how that's going and what it also means for shareholders as well. For
the 79 properties that ALE owns, well, we have actually 86, but 79 subject to review. Of those, 36 ALH has agreed to a 10% increase. For the remainder, another 43, we are proceeding through a determination process. By the end of this year, we expect those determinations to be handed down, and we'll announce those results to the market. So what's the margin now with long-term rates and portfolio yields? As you'll see from the chart, and it's quite an interesting chart, across the top of the chart, there's a line which shows what's happened to our yields over the last 10 plus years, and they've fallen by around 1%. Over the same period, 10-year government bond rates here in Australia have fallen by more than 5%. To at 30 June, just around 1.3%, but since 30 June they've fallen to below 1%. It's quite extraordinary, really. So for ALE's investors, lower interest rates are a positive. Why? Because lower interest rates in time translate into higher property valuations. Let's wait and see as they come through, but it is a very positive tailwind for the portfolio. And Andrew, for those who are not familiar, Woolworths has just recently announced that they're spinning off their Endeavour Drinks business, which includes drinks and pubs, some of which are owned by the ALH investment group. Just tell us what this means for ALE. There'll be two steps to the process. The first is a merger, and that is a merger of the ALH pubs with the Woolworths drinks business, Endeavour Drinks. Together, they'll be named Endeavour Group. That'll take the ALH turnover from around 4.8 billion to the Endeavour Group at around 10 billion, and similar doubling of the profit line. The second step is once that merged group's voted on towards the end of this year, sometime during next calendar year, there'll be a separation of that Endeavour Group from Woolworths. And there's a number of forms that can take, but we're particularly encouraged that the aim is for an investment grade rating to be achieved for that Endeavour Group. So all this is boding extremely well for you and for your group rather. So what does this mean for your outlook? For financial year 20, a number of things will dominate the first half, and that is the handing down of the rent determinations. We'll also be preparing for, in the early stages, of a refinancing of around half of ALE's debt. $225 million comes up for maturity in August 2020, and currently that has a coupon of around 5%. We expect to refinance that, if current rates prevail, with a coupon of under 3%. Over and above that, we'll be monitoring each of the steps of the Endeavour Group merger and then demerger as they occur.
And just lastly, Andrew, before we let you go, sadly you've announced that you'll be leaving the group. So tell us about the succession plans and where you're headed.
Well, it's been 16 very enjoyable years working with ALE. I've decided after that many years of loyalty to go out and look for another executive challenge. Importantly, it's not right now. I'll be completing some important projects like the rent determination and working with the board to ensure that the new CEO transition goes very smoothly indeed. What I would say to the new CEO is he has a fantastic property portfolio to work with, a very capable board and a very experienced management team. But for me, not right now, but sometime soon, I'll be moving on to that new challenge and I'm very excited.
Congratulations on your results and thank you very much for your time, Andrew Wilkinson.
Thank you, Jess.